The inevitable rise of Bitcoin to $1 million by 2030. In the current landscape of global finance, Bitcoin stands as a beacon of digital innovation and financial sovereignty. As we look ahead to the year 2030, the case for Bitcoin reaching a valuation of $1 million becomes increasingly compelling, driven by a convergence of fundamental factors that position Bitcoin as a store of value and a hedge against traditional fiat currencies. One of the foundational pillars supporting the ascent of Bitcoin to such a staggering valuation is its inherent scarcity. With a fixed supply cap of 21 million coins, Bitcoin distinguishes itself as a deflationary asset, in stark contrast to the inflationary nature of traditional fiat currencies. This scarcity, coupled with increasing global adoption, creates a compelling case for Bitcoin's value to soar. Furthermore, the process of halving, which occurs approximately every 4 years, serves as an additional catalyst for Bitcoin's appreciation. The halving event effectively reduces the rate at which new Bitcoins are created, thereby curbing inflation and reinforcing the scarcity of the digital asset. This mechanism not only bolsters Bitcoin's value proposition but also underscores its long-term viability as a sound investment. During the halving, the reward that miners receive for adding new valid blocks to the blockchain is reduced by half. This mechanism is designed to control the supply of Bitcoin and ensure its scarcity, thereby contributing to its value as a digital asset. The first Bitcoin halving took place in 2012, reducing the block reward from 50 to 25 Bitcoins. In the second halving in 2016, the reward was halved again to 12.5 Bitcoins per block. The most recent halving occurred in May 2020, further reducing the reward to 6.25 Bitcoins per block. This reduction in miner rewards directly impacts the issuance of new Bitcoins. As the reward decreases, the number of new Bitcoins entering the market also decreases. This scarcity contributes to the limited supply of Bitcoin and, according to the law of supply and demand, can increase its value. The halving is a key component of Bitcoin's mining algorithm and is designed to limit the maximum supply of Bitcoin to 21 million coins. By reducing the number of Bitcoins issued, a deflationary system is created, aligning with the fundamental principles of Bitcoin. It's important to note that the halving not only affects the issuance of new Bitcoins but also has implications for the overall Bitcoin market and economy. The reduction in rewards can impact the profitability of Bitcoin mining, as miners receive fewer Bitcoins for their work. This can lead to increased competition among miners and greater efficiency in the mining process. Additionally, the halving can also impact the price of Bitcoin. Historically, halvings have been associated with significant increases in the price of Bitcoin. This is due to the reduced supply of new Bitcoins and the growing demand for the cryptocurrency. In recent years, the mainstream acceptance of Bitcoin has been further solidified by the introduction of Bitcoin exchange-traded funds, ETFs. These financial instruments have facilitated the seamless integration of Bitcoin into traditional investment portfolios, thereby attracting institutional and retail investors alike. The influx of capital from these segments of the market serves to bolster Bitcoin's price and solidify its position as a legitimate asset class. Moreover, the ongoing debasement of major fiat currencies such as the dollar, euro, and pound due to inflationary monetary policies has prompted a growing number of individuals and institutions to seek refuge in Bitcoin as a hedge against currency devaluation. This flight to safety, driven by a loss of faith in traditional currencies, is poised to further propel Bitcoin's valuation to unprecedented heights. Additionally, the continued evolution of financial infrastructure and technological advancements will likely contribute to the widespread adoption and utilization of Bitcoin as a medium of exchange and store of value. As Bitcoin's utility and accessibility expand, so too will its perceived value, serving as a catalyst for its meteoric rise to $1 million by 2030. In conclusion, the convergence of Bitcoin's inherent scarcity, halving dynamics, ETF integration, growing institutional and retail interest, and the devaluation of fiat currencies align to create a compelling narrative for Bitcoin's ascent to $1 million by 2030. As the world continues to embrace the digital revolution, Bitcoin stands at the forefront, poised to redefine the global financial landscape and cement its status as a cornerstone of the digital economy.